Welcome back. Still tuned into Midcap Radar, and Cosmo First is the company on our radar today. The company delivered a weak set of numbers for the third quarter. Says the BOPP and BOPET industry, they face challenges of excess supply due to bunching of new production lines and also encountered demand disruptions in overseas markets. Pankaj Poddar, the CEO of the company, is joining us now to discuss the earnings fine print and the outlook going forward as well. Mr. Poddar, good afternoon. Thank you so much for joining us. Well, of course, it's an industry-wide problem. We saw this in numbers of Uflex, Ester Industries as well. All these stocks are lower in trade. But from Cosmo First perspective, I wanted to understand, since majority of your revenues coming from specialty films, how could you not navigate the supply side situation? What went wrong this time around, and what is Q4 looking like?
So hi, very good afternoon. First is, we are so glad that we have reported much better numbers than the industry average. Obviously, from the optics, it certainly looks that our numbers are lower. But we have to also consider that this quarter, due to various inventory corrections and supply chain corrections around the globe, we have incurred roughly 32 crore one-time hit. And then this number also includes 8 crore rupee of losses on the newly started BOPET, as well as the pet care business Ziggly. So put together, these numbers also include that 40 crore number. And, so those are the two main reasons. The other thing is the specialty itself, which has been growing quarter on quarter for last many quarters, has taken a dip in this quarter from 64-65% of last quarter to 57% of this quarter, because there also we saw a lot of inventory corrections across customers in Europe and America. So people had earlier bought more, and this quarter, they said that, sorry, we cannot buy, so in our exports, our specialty sales went down. But in spite of this fact, we have a double-digit EBITDA numbers. We have a return on equity, even in such a worse market, at 25%. So from that perspective, yes, we feel that we have done quite well.
So one of the aspects is the excess supply caused by bunching up of new production lines and the inventory hit that you've had to take, and the the batch that you had started for pet care, etc. But on the demand side as well, you're saying that the company faced demand destruction in overseas market. Can you talk about that? What's leading to this weakness in demand?
So this is not weakness in demand. This is more about inventory corrections. So what had happened during COVID, last phase of COVID actually, was that, the supply chain disruptions were there, as we all know, and everybody was trying to buy more. And let's say the transit time from India to US, which in the normal course is 30 days, during that phase, it had gone up to as high as 90 days. So one side, everybody was facing shortages of material, and the other side, the supply chain was taking longer. And accordingly, people were buying more, customers were buying more. Even in some cases, we had to import more. And then post-July, what we saw is that, all of a sudden, the transit times started reducing, the freight cost came down, the raw material cost started coming down, and everybody kind of started correcting their inventory. So we saw that our specialty sales was the highest in July. August and September, it still were at decent numbers. But post-October, when the whole market realized that, we are in an overbought situation, everybody started buying much lesser, or some customers even said that, sorry, this quarter will not buy. So it's not as much demand, I would say. It's more of inventory corrections, and we're already seeing some corrections from January. It may take a month more maybe, but things will be back to normal soon.
Okay, so what does it mean in terms of your FY23, FY24 performance? Because you had earlier said that, FY23 will be a good quarter where you'll be able to maintain margins. What is the top line growth looking like? How has Q4 panned out so far, since you're saying it'll take some quarters for this inventory destocking and the channels to improve as well? What is the outlook going forward in terms of margins and revenue growth?
So Q4, we definitely feel should be better than Q3. Obviously, it's still half the quarter, and it's a little early, and our industry is quite unique, especially when it comes to the normal BOPP and polyester films. So to that extent, it's always difficult to say. But in general, most of these corrections which happened in Q3, some of it will get reversed in Q4, and therefore things are brighter in Q4. Obviously, from Q1, we see everything to normalize soon and customers buying again. And therefore, and as far as the Indian demand is concerned, that's growing very well. So if you talk about Indian demands, definitely growing at double-digit numbers. It's just that all of a sudden, there's too much of bunching of capacity which happened both in BOPET and BOPP. The good thing is in BOPET, now there are only 2 more lines which are left in next 2 years. So we expect personally, I mean, if you ask my personal opinion, that I feel that it's a matter of few months here and there, and then the BOPET prices should again start getting more rationalized or better. As far as BOPP is concerned, there's still some more supplies to come in next 2 years. So it will happen in phases. It may not happen maybe in a quarter. But yes, that will also start improving. And the better part the good part in the BOPP is that next year, there are only 2 more lines coming up. The more bunching happening in BOPP is actually in the year FY24-25.
Got it. Okay. Specialty chemicals, wanted to get the outlook there because I think for FY23 you seem to have lowered the top line guidance. You are guiding for a top line of 160 to 170 crores for specialty chemicals, and previously you had spoken about 180 to 200 crores. What's the outlook for FY24? What would be the big drivers? How do you see this playing out?
So even on this revenue this year, we have made some marginal profit. This business also underwent the same challenges which film had to go through. Here we do not export as much, so there is a lot of imports that we have to do. And in case of imports, we had to keep more inventory when the supply chain issues were there. And we were left with certain high cost inventory, which had to be consumed in Q3. Some part of it will be consumed in Q4 as well. Now that the prices have come down and therefore the revenue guidance went down a little bit, and even customers to that extent were a little hesitant to buy as much as they were buying, in the earlier quarters. Here also, from last year, we were close to 80 crores. We should be doing 160, 170 this year. And next year, we should be touching close to 250 crores. We are, so earlier we were doing master batches in textile chemical. We are in the final phases of trials for adhesive also. So that will be also the adhesive for industrial, which are very similar to our, the film industry, same set of customers. So packaging adhesives and lamination adhesives, we're on the process of launch. Yeah.
Okay, Mr. Poddar, because we have lesser time, I would just quickly want to slip in one more question, and that's on the pet care business. You did mention that the industry this time around larger funding of operating deficit in the rapidly growing pet care vertical. Are you seeing slower growth here? Will the break-even point, the demerger that you had mentioned as well earlier, be delayed because of it? What is the run rate that you're looking at? 12 crores GMV for FY23. What is FY24 looking like?
So we are growing phenomenally well month over month. Our app has been launched, which has been quite a success. We had also done a brand video, which has already 25 million impressions on it. So the business is going quite well, both from digital business as well as the retail business. In retail, we have now, as on today, we have already opened 14 stores. By March end, we are saying 16. And next year, we are saying anywhere between 35 to 40 stores put together. This business itself, from 11-12 crore rupees of net revenue, should easily become 4 to 5 times next year. And a year thereafter, the GMV, we are talking about close to 125, 130 crores. So this business is scaling up very well. And obviously, in the initial phases, we'll have to make some losses. But we are hoping that in 2 to 2.5 years, we will start to make money once we have consolidated, our supply chains are stronger. We do a fairly large volume, to negotiate with our vendors and charge the right pricing to our customers. So we feel 2.5 years will be the right set of numbers to achieve that.
Thank you very much, Mr. Poddar, for joining in. That's Cosmo First talking about their films business, specialty chemicals, and the pet care business, which will turn profitable in the next 2.5 years. Get into a break. On the other side, we'll talk more about the markets. We'll also get you our Midcap Spotlight stock of the day.